Assalamualaikum and hello everyone. We are from Group 3. Today, we would like to briefly present about Cekd Berhad. Cekd is an investment holding company involved in the manufacture and sale of die cutting molds both in Malaysia and international. Established in 1989, the company operates under the metal fabrication industry and owns 5 subsidiaries. It operates 6 ISO 9001-2015 certified factories located in Kuala Lumpur, Johor, and Pulau Pinang, serving industries such as printing, electronics, automotive, plastic, textile, and leather. Cekd vision is to be the best die cutting solution provider in the Asia Pacific, while its mission is to create value for customers and pursue continuous improvement in all aspects of its operation. The company holds a strong market position with performance score of 8, ranking in the top quartile of its industry, significantly above the industry average of 5.1 and the FTSE Bursa Malaysia, the LCI average of 6.6. Operationally, Cekd focuses on manufacturing custom die cutting molds and trading related tools, accessories, and consumables, with strong emphasis on quality, innovation, and customer satisfaction. Cekd continues to lead the market with its expertise and experience.
Next, we move to the MFRS. First is PPE. For Cekd Berhad, the main assets under PPE are the machinery and equipment used in production. For revenue, Cekd Berhad recognizes revenue when it's probable receive future economic benefits. For intangible assets, for Cekd Berhad, their intangible assets include patent, trademarks, and goodwills. For agriculture or biological assets, Cekd Berhad is not involved in agriculture because they don't have biological asset. MFRS 141 is not applicable for the company. For investment property, Cekd Berhad's factory is for their own productions, not for rental or investment. Therefore, MFRS 140 is not applicable. And then, lastly, for provision, contingent liability and contingent assets, Cekd Berhad does not have any major provisions or contingent liabilities that need to be recognized in its financial statement. There are no significant obligations with an uncertain amount or timing of payment. So, MFRS 137 does not apply to the company's financial reporting in this context.
Quick snapshot of Cekd Berhad. With a market capitalization of RM73 million, Cekd is showing steady growth in the machinery sector. Revenue grew by 9.16% to RM43.33 million, and net profit rose to RM7.16 million, giving a solid net profit margin of 18.92%. Return on equity stand at 10.62%, reflecting strong shareholder value. For financial year 2024, earnings per share increased to RM0.035, up from RM0.026 in 2023. While Q2 2025 EPS saw a slight dip, the full year trend remains positive. On the expenses, Cekd kept a tight grip with total expenses at RM12.39 million and cost of sales at 24.26 million. Overall, Cekd maintains strong margins and align well with the industry growth rate and is in a solid position for continued performance.
Cekd Berhad recognizes property, plant and equipment only when future economic benefits are probable and costs can be reliably measured in line with MFRS 116. The company used the cost model for measurement, recording PPE at cost less depreciation and impairment. As of 31st August 2024, PPE stood at RM40.95 million, up from RM38.94 million in 2023, showing growth and reinvestment in operations. Depreciation, recorded under administrative expenses, rose from RM7.32 million at 2023 to RM8.12 million at 2024, likely due to new asset additions. In summary, Cekd Berhad complies with MFRS 116 and its rising PPE balance and depreciation reflect ongoing operational investment.
As of August 31, 2024, Cekd Group's total assets decreased to 81.16 million ringgit from 98.19 million ringgit the year before. This drop was mainly due to the early payment of term loans using 31.29 million ringgit in cash. Interestingly, despite the drop in total assets, net assets increased by 3.11 million ringgit or 4.5%, reaching to 72.35 million ringgit. As a result, net assets per share increased slightly by 0.01 ringgit to 0.27 ringgit. The group also made strategic investment in non-current assets, spending 4.93 million ringgit in capital expenditure to boost its long-term operations. One highlight is the acquisition of a 1.5-story light industrial remote stroke block in Perkembangan, Selangor. This added 2,700 145 square feet to their operating space, bringing the total to 104,159 square feet across 5 factories in Kuala Lumpur, Penang, and Johor. Additionally, Cekd Group upgraded its plant and machinery to increase manufacturing capacity and also expanded its portfolio in properties under leasehold agreements.
We are going to explain about impacts on asset management and valuation strategies. Inflation, the impact on Cekd's asset management such as higher replacement cost for assets, where the cost of replacing or upgrading machinery increase, impacting capital expenditure planning and potentially delaying investment. For inventory management, inflation makes holding large inventories more expensive. Fourthly, Cekd to consider just inventories or financing inventory level. Then, for impact on Cekd's valuation strategies such as asset evaluation, Cekd might improve value tangible asset to reflect higher replacement costs and perception of its asset base. Next, for depreciation consideration, historical cost depreciation may not be reflected. Under market valuation, impact on Cekd's asset management, access to capital. A lower market valuation can make it more difficult or costly for Cekd to raise capital through equity issuance, potentially limiting funding for new asset acquisition or expansion. Shareholder expectations, perceived undervaluation might limit management focus strategies to unlock shareholder value. Impact on Cekd's valuation strategies, driving shareholder value. Cekd's management will likely prioritize strategies to increase market valuation, investment decision. Valuation metrics will guide new asset investment decision with Cekd prioritized investment that promise high return and sustainable growth. Under interest rate charges, the impacts on Cekd's asset management, investment appetite. A favorable interest rate environment stimulates economic activity and boosts confidence, increasing demand for Cekd's product. Working capital management, stable interest rate helps Cekd manage short-term financing for working capital more efficiently and cost-effectively. Impact on Cekd's valuation strategies, discount rate in valuation model. A stable or lower OPI generally leads to a lower cost of equity or debt, resulting in a lower weighted average cost of capital to SCC. For investor returns, low interest rates on safe investment make equity like Cekd shares relatively more attractive, potentially supporting higher valuations.
Next, we move to financial ratio analysis. We have three ratios. It's return on asset ratio, asset turnover ratio, and debt to asset ratio. For return on asset ratio, the formula is net income divided by average total asset. And for asset turnover ratio, net assets divided the average total asset, and debt to asset ratio, total liabilities divided to total assets. Okay, for return on asset ratio in 2023, the return on asset was 0.06 and increased to 0.08 in 2024. This means this is good sign for Cekd Berhad. And for asset turnover ratio in 2023, the ratio is 0.35, and in 2024 it increased to 0.4. This upward trend indicates that the company able to produce more sales. That is a good sign for Cekd Berhad also. And for debt to asset ratio in 2023 is 0.29 and it fell to 0.11 in 2024. This decline signals improvement in financial stability, and its lower ratio means that less financial risk, and it's great for Cekd Berhad.
Now, we move to evaluation of non-current asset performance. Cekd Group's return on assets, or ROA, increased from 0.06 in 2023 to 0.08 in 2024. This is a positive sign showing the company is generating more profit for every ringgit of assets it owns. This improvement is likely linked to strategic investment in key non-current assets. The group spent 4.93 million ringgit on capital expenditure, including a new freehold building and upgraded plant and machinery. These additions help boost operational efficiency and may have directly supported the increase in ROA.
Let's turn our attention to Cekd Group's asset turnover ratio. This ratio has increased from 0.35 in 2023 to 0.4 in 2024. A higher asset turnover ratio is a positive sign. It signifies that Cekd Group is now generating more sales for every ringgit of assets it holds. Regarding the impact of key non-current assets, strategic investment in new factory space such as freehold buildings and upgrade machinery have significantly boosted the group production capability.
Current asset total RM45.81 million, marking a stable but strategic shift in asset structure. With a market capitalization of RM73 million, Cekd is showing steady growth in the machinery sector. Revenue grew by 9.16% to RM43.33 million, and net profit rose to RM7.16 million, giving a solid net profit margin of 18.92%. Return on equity stand at 10.62%, reflecting strong shareholder value. For financial year 2024, earning per share increased to RM 0.035, up from RM 0.026 in 2023. While Q2 2025 EPS saw a slight dip, the full year trend remains positive. On the expenses, Cekd kept a tight grip with total expenses at RM 12.39 million and cost of sales at 24.26 million. Overall, Cekd maintains strong margins, align well with the industry growth rate, and is in a solid position for continued performance.